Let's bring in Kevin Green, senior markets correspondent here. Kev, we're talking Alphabet, Google's parent here. Had a pretty good run, up over 30% so far this year, but downgrade today. And you know what? When I look at the downgrade and just kind of reading through it out of the Rosenblatt analyst, it kind of makes sense. It's had a really good run, just hit all-time highs yesterday during the session. Hey, maybe a wait-and-see approach warranted here?
Maybe. I think they are kind of utilizing some, recycling some of the concerns that we had around 2 or 3 quarters ago when it came to Google, especially when they were trying to roll out Gemini here. But they are reducing the stock to a neutral from a buy with a new price target of $181. And they're really just calling out the fact that AI could actually be taking market share from them when it comes to ad revenue, and that can actually impact their top line. They also believe that Microsoft's Bing, based on their data, is actually taking some search share away from them, which is actually kind of telling here. It doesn't really take much for Bing to kind of see some incremental gains that actually drive some meaningful top line growth there for Microsoft. So that's another concern that they have. And then once again, kind of sitting back, wait it out a little bit, let the multiple really try to mature at this point. But once again, we had this kind of conversation and these concerns a couple of months or a couple of quarters ago here, and it seems like they're just kind of bringing it to the light again because of the aggressive price action to the upside that we've seen.
Yeah, Kev, they are beating this company up about the Gemini and the reputational loss with this name. But you know what thing is about Google, Kev? They always get it right in the end, right? They keep working at it. They've got nothing but money to keep working at these things. And Kev, here's my point that people should think about with Google Alphabet. We talk about AWS a lot. We talk about Azure a lot. Google Alphabet late to the game in terms of Google Cloud, but this thing's growing like a weed, Kev, and it's starting to pick up. Now, it's not in the top 2, right? Those 2 are still fighting it out, but this is coming. I mean, Google Cloud is starting to compete, and the numbers are starting to get big, and YouTube is also starting to hit its stride. So isn't the future pretty good? They've got good growth here, and with 90% of search, when AI comes in, they're going to get that right too, aren't they, Kev?
Yeah, I think they will. I mean, we also have to kind of keep in mind, too, when you're looking at Google Cloud, it's really a methodical type of product offering that they're really trying to put money to. So I think what we have seen for the market is so much demand, and they want to see immediate results. But I think they're trying to take a little bit of a different approach. And then also, when we talk about artificial intelligence, there's several different types of artificial intelligence that they're deploying within their overall business here. And I think the ad side and the targeting of these ads to the consumer is going to be really that tailwind for them. And we kind of see the same type of scenario actually happening with Meta at this point. And yes, you're going to see this back and forth between AWS, Azure, Google Cloud. But at the end of the day, I think there's probably enough market share out there for everybody. And I think rising tides are going to lift all boats. Just one asterisk there for Google Cloud in that business segment. They did change the structure, the underlying structure of that business around 3 quarters ago. So the year-over-year comps is a little bit difficult. They kind of stripped out a lot of the R&D spend and expenses within that business and kind of moved them over into another segment, which is why we are actually seeing a lot better year-over-year growth and a lot better metrics for that business here because it's not being weighed down by some of the other hobby projects that they're working on for the long term.
Yeah, and we just talked about Meta Platforms, KG, and advertising dollars keep pumping in. They beat estimates on revenue by nearly $2 billion just last quarter, 15% year over year. So when you look at the valuation on Google Alphabet, I always look at it as it's cheaper than the other tech names in this space, and they hasn't lost any market share to Bing from what I've seen, the data I've read. So is this, a bargain as far as valuation goes compared to the other big major tech companies?
That might be the case. Once again, Rosenblatt is stating that they have data, and I haven't seen this data either, but they have data that Bing is taking some search away from Google. Once again, I haven't seen that evidence myself, but it might be a bargain. I would say the YouTube segment is actually very interesting. So we continue to talk about the streaming companies out there, the Netflix, the Disney Pluses, but if you actually look at it, YouTube actually gets more eyeballs than any other streaming platform that is out there. And so I think there's some tailwinds there. It just hasn't been performing up to the expectations that analysts have had. And I think they're really trying to reformulate their back-end algorithms to once again have better targeting. And that will be a tailwind for them in the future. So is it a value here? who knows? I mean, when it's hard to pick a stock when it's at its highs, right? It's really
Yeah.
hard to really justify it. But down the road, if you're kind of looking at the passive flows for this space, you would tend to think that it could have additional stock appreciation here over the next year or 2 years.
All right, great backdrop for us. Appreciate it. That's Kevin Green, Senior Markets Correspondent here, breaking down